Audience P, welcome. It is Wednesday morning, June 3rd, 2020. Today we're going to actually focus on something that's pretty interesting, pretty basic, but incredibly important. And the reason I bring this up is because I'm getting a lot of feedback from people asking, why does the stock market keep going higher? Why should how can I word this properly? What should I do about stocks? Here's the best way to word it. What should I be doing about stocks that I have really good profits in off of the March lows, stocks that you bought while it was going down or as it was turning around? And what do you do with them? There's this immense feeling of how much higher can it keep going in this short period of time without the market pulling back. So we're basically in a 2-month rally without the market pulling back really that much. The only thing that the market really did was it kind of went sideways for a little bit of time there. The Dow was actually in kind of like a multi-week trading range. But as we've been saying, individual stocks continue to move higher. And that's really what the bottom line is. Unless, I don't know why that happens, unless you're only in ETFs right now, where it might have been a little frustrating not to see the same kind of momentum that we've been seeing in individual stocks such as SE and ZS and DDOG and Penn and a few of those. I could see why it would be frustrating, and I could see why you're asking what's going on while some of these stocks are having 10 or 15% moves literally in a day, actually. Penn, for example, 3%, 10% is a $3 move, and it's been doing that consistently. Not consistently. It's been doing it, which is incredible. So anyway, what we're going to do today is we're going to work the charts, but I want to answer the question really in the easiest way so that we can all be on the same page about what's actually going on in the stock market. The stock market is not the economy, and the stock market is a forward-looking mechanism. So when you buy earnings, when you buy a company for the earnings, you're buying the future earnings. You're not buying the earnings of what they're doing right now. And right now, what's going on in the market, I think it'd be very hard to say that we're buying good future earnings. I understand that the country's reopening and whatnot, but if you really think about it, how many people do you know that haven't been to work full time in the last 2 months? How many small businesses where you live have not been open or partially open at all, right? That is battling trillions of dollars in federal stimulus. So you have trillions of dollars of federal stimulus versus the smaller businesses not being able to operate at full capacity. Right now, the stimulus package is winning, and the easiest way to see that, if you don't happen to be a day trader, which again, there's nothing wrong with not being a day trader, we see this on an intraday basis where the market pulls back and actually has kind of like these what a day trader might term a violent pullback, or looks like a very strong pullback. And you're like, all right, here it is. I have to tighten up my trailing stop loss on a lot of my winning trades. And then all of a sudden, it just stops and then rallies for the next 4 hours. And even yesterday, we saw this massive rally into the close. That's the stimulus package working. Think about the wealthiest investor you could ever possibly imagine playing this game where they had $2 trillion and they just decided to be buying. That's what's going on. And until we see that change, this is the world we're going to be living in right now. This is the stock market we're going to be trading in right now. Is the market due for a pullback? Maybe, maybe not. I don't know. It could happen. It will happen. It should happen. All of those things. But here's the biggest thing, and I go over this in the coaching program, and it's kind of like a light bulb moment for some traders where they're not realizing that when it's obvious like this, and again, I say this in context, when pullbacks continue to find bids, and a bid means you're advertising to buy and you're supporting that stock, and we just keep seeing rally after rally after rally. Here's the important part that I just can't stress this strongly enough. You need to trade you need to trade that 10 out of 10 times. You're not worrying about the one time it's going to actually pull back. You have to make money on the 9. And even if you don't make money where you mismanage the position, it's still the right trade. So it's incredibly important for you to understand how to work the charts, for you to understand how to say, right now, the only thing I should be looking to do is buy. And until until I start losing money buying, there's no reason for me to stop. You can't worry about the 1 or 2 times it turns around, or when it eventually turns around, or trying to time when it'll eventually turn around. There's one situation where you'll start to have like mental games with yourself, and that's usually a potential change of trend. And I said potential very clearly, that potential change of trend, because that's when you're not making money buying anymore, but it's clearly not a sell situation yet. And you start to play games with yourself in your head, and you're saying, well, if I can't make money buying, maybe I should be selling it short. Maybe this is the top. What ends up happening is that potential change of trend reestablishes itself like it did in a lot of stocks, and continues to move to the upside. Will stocks eventually turn around? Of course. We sold off in a crazy way. We rallied. A lot of stocks are actually now making 52-week highs again. That's just the way the market works. But we can't ignore the fact that there's this massive stimulus package holding the market up. Is that fair? Is that right? It doesn't matter. They saved, in their opinion, they saved the economy. They saved the bigger companies in the world, that we are all over the world at this point. And this is the world we're living in. It's imperative that if you want to do this and make good, solid monthly money, you want to have good investments, you have to pay attention to a lot more than the fear in your head saying it's eventually going to turn around, and turn on that greed gland just a little bit, and understand how to get into the charts and say, well, until I see something different, that's the direction I'm going. And that's really the whole point of the whole video. By the way, if you find these videos helpful, absolutely click down to subscribe. I would really appreciate it. So what we're going to do now is we're going to go through some of the stocks that I have in my universe, stocks that I trade every day, how I've been watching them, and then what I think is kind of cool, how that translates into trading decisions, how that translates into what you should be looking to do from a risk-reward perspective, from a probability perspective. So again, the biggest thing I want to get across in this video, and the biggest thing I hope you take out of this, is that you need a structure that says, as long as this is happening, as long as it's obvious, I'm going to continue to expect it to happen, and then I'll eventually be wrong once. And even saying wrong is really not the it's really not the right word, because eventually it means that you're not going to get follow through, and that doesn't mean that your idea was wrong. It just means that that's when it eventually turned around. So, as traders, as those daring people willing to take advantage of what's going on in the market and seize the day and be the people that are managing our own money, it's imperative that we take advantage of these situations, because quite frankly, it's been incredible. A 35% move off the lows, if not a little bit more at this point. We're not going to see that happen very often in that short of a period of time. So we're going to go into the charts right now. We're going to briefly work the charts. I think that's one of the biggest things that a lot of people that are emailing me, and especially new people into the coaching program, they're too passive in the way that they look at charts. I call them chart readers versus tape readers. Chart readers are just looking at it and looking for patterns and whatnot, and maybe even just looking for entry signals without really arguing for why you shouldn't or should be in those ideas. So we're going to do a little bit of that right now. We're going to hop over to the screen, and I'm just going to walk through some charts. So essentially, one of the biggest things you want to look for is it obvious? How long has it been obvious? And how do I identify a potential change of trend? So clearly in Apple right here, one of the things with drawing trend lines, you do not want to go through any previous price action. And this is technically the area where Apple broke the trend line. And once that happened, then we could start drawing a new one. And you can see that we did not go through any price. And then it actually broke it here. And this is actually the area that I was discussing before, which is a potential change of trend, right? So what's going on in Apple right now? How do you actually analyze this as a trade? Well, you can clearly look to the left, and even prior to the pandemic, right into earnings, Apple was stuck at this level. Let's call it the 325 level, just for argument's sake. So right in this area, this has been the level that Apple has had a hard time getting through even prior to that. So now you have to set up a trade idea. If I am long Apple, what does that mean? Meaning long, meaning you already own the stock. If I'm not long the stock, what does that mean to potential trading going forward? Remember, we just said the market's a forward-looking mechanism. Well, first thing we have to look to see is there profit potential at all-time highs through this level, which obviously we can do that pretty quickly by going over to the monthly charts and looking to the left. And you can clearly see that Apple is at or near, very, very, very near all-time highs in the stock. So what we have now is we have the stock has been traveling. Well, actually, let me get back to this section here because this is important. Once it broke the trend line, you now had a high and you had a low up to that point. So within that box, there's nothing to do. That's the potential change of trend zone, and that's where a lot of money goes to die. Remember, I talk about that all the time, and I'm very, very adamant that you learn those areas or types of price action where nothing's going on. That's the right price, but until it gets out of that window, you shouldn't be doing anything. Okay. So now Apple has very interesting setup here. It's got all-time highs right above where we are. It has a very, very little momentum, which in my world, and again, if you're watching and you're a regular subscriber, we talk about well bid and well offered, which are those candlesticks where you see higher highs and higher lows, kind of like we saw over here, right? Higher highs, higher lows, and then became well offered, which changed the trend and then quickly recovered. So in my world right now, Apple to me is nothing to do from a swing trading perspective or longer term until we can clear these all-time highs, because the fact of the matter is that's the right price that we haven't been able to get to even prior to what's going on in the world right now. On top of the fact that now you can make a case for 1, 2, 3, 4, 5, 6, 7, 8, and 9. We essentially have a 9-day trading range where the stock is pausing at or near all-time highs. So the last thing we would need to do now is see what kind of volume we have. And before I even pull it up, lighter volume would indicate continuation. Heavier volume would indicate that smart money is selling up in this area. And you would expect it to start to trade in the opposite direction. And we're not seeing a massive volume spike up in this area. So that would imply to us that we're going to see some, at least an attempt to make higher prices. Whether it stays above that level remains to be seen. But this is a very clear picture of how to assess what's it doing now. Should I do anything? And the answer is in this window. I almost pointed. In this window here, there's nothing to do. Now we went straight into another trading range, 9-day window. If that's the right price, not a lot of action. That's where money goes to die. And now you're at really at all-time highs, and we're pausing there. So the better trade for me, if we were trading in my trading floor in New York City, would be we were looking for it to clear that level before we did anything. Take a look at Amazon, same exact thing. You can clearly see that we actually broke here. This was actually a big trade that we let me just draw that out for you really quick. We were working the charts here, and this was the area where we finally decided, okay, Amazon now on this close, we can start looking for a long again. But then we went into kind of what you might call a longer term trading range here, which was actually exhibited by the market, right? Finally broke through and looked like this was going to be the new leg higher, but it has not been. This has not really been the easiest stock to read, and you can see that here. Where you're starting to see a lot of closes below the open as opposed to like what you saw here where you can expect follow through. So right now for me in Amazon, I need to see this stock get above this level and stay there. And it's a $2,000 stock. You really need to be on top of your game if you're going to trade Amazon. So because I don't see any clear, clean order flow, because I don't see any solid momentum to the upside, we're kind of seeing wider whippy type price action, which technically is usually distribution. What distribution means selling at that level before we start to see a little bit of a markdown in the price. Not a reason to get short. I want to make that clear. Not a reason to sell your stock, but this is one of those areas where right now that's the right price, and it's essentially 2280 to, let's call it 2480. So a $200 trading range in the stock right now. So you can see that that's basically the right price. So again, for me personally, I don't get involved when it's the right price. I want to see it get out of that range and then see some momentum for the next move higher. Boeing is actually an interesting one. Boeing we actually had this drawn in Boeing for the longest time, where we were waiting for it to break out of this consolidation, again, working the charts. So in this window, nothing to do. Now, I know a lot of people are bragging that they bought the bottom and made that money, but since then, the stock has not really done that much. It looks like it's breaking to the upside. If we zoom out a little bit more, you can clearly see that it actually has. So if I was doing anything in this stock right now, I'd be leaning on this very short-term move to the upside, only looking for longs. But here's the key. Because it's only 2 weeks worth of price action, I'm not going to have as much conviction as I would in Apple that has 2.5 months of buying pressure. So that's actually how we set up the trades. That's what we do. We do this stock by stock by stock. So what I strongly recommend that you do is, number one, stick with your stocks if they're obvious. But number two is spend some time with your charts without any indicators on it. You'd be surprised at how many different things you notice on your charts and price action. And again, this is the difference between chart reader and tape reader. You'll be shocked at how many things you notice without moving averages, without all the indicators. You say, why was I even trading this stock? It was going nowhere. Just because the MACD turned up, but it's in the middle of nowhere. So I challenge you for a few days, a week, the rest of your trading, do some game planning, without indicators, and just draw trend lines, just draw boxes, just see where it stops, see where it goes into a consolidation, and challenge yourself to say, that's the right price. I'm doing nothing until I see that changes, or buyers are clearly in charge. I'm going to keep buying or hold my trades until I see a reason that they're not. And this is really a good way to make that leap from chart reader to tape reader and ultimately become somebody who understands how to manage trades, which is what I call the final stage, which is a trader. So hopefully you understand that a little bit better. You understand that you don't need to make it complicated, but you do need to make it consistent. That's the big thing. You need to look at the market every single day the same way. Otherwise, you'll just be overwhelmed and confused, and we don't want that, right? So if you have any questions about what we covered here, absolutely click down and leave a comment and give us a thumbs up if you like the videos too. Have a great day.